Capital gain tax examiner will ask you in the exam about 10 to 15 marks of this topic. And when
Okay.
CGT, when the capital gain tax apply in the exam, whenever you will sell the asset, you have to apply the capital gain tax CGT on it. The format of CGT is disposal proceeds, DP, in short, DP. So disposal proceeds means, for example, I am selling my house for 100,000. So 100 is my disposal proceed, less cost, and you will get a chargeable gain. Then you have to
Okay.
deduct the annual exemption, which is fixed for the tax year 18-19. How much annual exemption any individual can get? 11,700. And then you will get the taxable gain. On this gain, you will apply the CGT rates. And what are the CGT rates? Up till basic band mean up to 34,500, it is 10%. Above basic band mean in higher and additional band rate is 20%. Okay. And you can see the line, next line, bands are same, which are used for income tax. Mean basic, higher, additional, all bands are used for CGT and income tax. Okay.
Yeah.
So next line, bands are used in following order. No, firstly, non-saving income, use the bands. Means firstly, we will apply the tax on non-saving income, then saving, then dividend, and lastly, we will apply the CGT. Okay. So firstly, incomes will consume the bands, and then gains, CGT will apply, then gains will consume the bands. How, for example, uh, Mr. A has following incomes in the tax year 18-19. Taxable non-saving income 10,000. Taxable saving income 5,000. Next, chargeable gains 20,000. And your requirement is calculate the tax. Okay.
Yeah.
Now, firstly, tell me, income tax will apply firstly on the incomes. So there are two incomes, non-saving and saving income in the question. So make the two
Yeah.
columns. Taxable non-saving income in the question is 10,000 and saving 5,000. So, first 10,000 non-saving income all covered in the basic band, rate is 20%, is equal to 2,000. And out of saving income 5,000, 1,000 nil rate band available, zero tax. And the remaining 4,000 saving income covered in the basic band, rate is 20%. What is the answer? Please calculate it.
800.
800. And so total income tax liability
2800.
2,800. Now CGT will apply on the gains. And in the question, chargeable gains are 20,000. Chargeable gain means firstly we have to deduct the annual exemption, which is 11,700. And then taxable gain arise. How much?
Eight 300.
Rate 3.
8,300. 100.
100.
8,300. Okay. Now we will
Yeah.
apply the CGT rate on 8,300 gain. But tell me, your basic band is 34,500. How much basic band is consumed by the taxable incomes? What are the total taxable incomes in the question?
15.
30,000.
How? 30?
15. 15.
Yes, 15. So
10 and 5.
3,000 incomes consume the basic band. How much basic band still remaining? 19,500. And you know, your all 8,300 gains are covered in basic band 19,500. So 8,300 at the rate of 10%. What is the CGT payable?
830.
Done. So that's how you will
830. Yeah.
that's how you will apply the CGT rates. So firstly, incomes consume the bands, taxable incomes, and then gains consume the bands. Clear?
Yeah.
Okay.
And part disposal topic, I already send you the recorded lectures. You can go through these all topics. But can you
Yeah.
open the last topic of CGT, incorporation, last 2 to 3 topics missing in the recorded lectures? So I want to discuss here with you.
Okay.
After gift relief, you can see the topic incorporation relief. Can you see in the notes?
Incorporation relief.
Yes.
Yeah. Yeah.
So, incorporation relief means when an unincorporated means you can see in brackets, sole trader partnership business means not a company. Unincorporated means not a company. So, when an unincorporated business is incorporated, then again our loss arise. What is this? Just write down. You can see on the screen. For example, I am running the
Yeah.
sole trader or partnership business. Okay. And when I convert this sole trader partnership business into a company, okay, convert means all the assets, it means all the assets of the business I am transferring to the company, right? So when a sole trader
Yes.
partnership business is incorporated, it means I am converting my business into a company. So it means all the assets of the business will be transferred to the company. So when asset transfer to company, it means on these assets, DP less cost, a gain arise. Okay.
Yeah.
This
Yeah.
gain will be deferred through incorporation relief.
Mm.
Incorporation relief will be available. All the gain of the business, sole trader partnership business assets gain will be deferred. Chargeable now zero, because all gain will be deferred through incorporation relief. Okay. And
Yeah.
and you know, in return from company, I will get the shares of the company. When assets of the business transfer to company, in return, obviously shares will be received. Okay.
Yeah.
Okay. When you get the shares of the company, shares of company, what is the value of shares? Obviously, for example, the worth of the business, the assets worth of the business is 100,000. Okay. Then I transferred the assets worth 100,000 to company. In return, I will get the shares worth 100,000. Okay. So
Mm.
it means
Yeah.
value of the business assets will be same as value of shares. Got my point?
Okay.
So worth
Yeah.
of the business asset, DP, disposal proceeds of the assets, 1 lakh. So it means I will get the shares from the company value 1 lakh. So it means cost of the share is 1 lakh, and this 1 lakh is just equal to the worth of the business. Okay. So
Yeah.
tell me, if I decrease the cost of the shares by the incorporation relief, deferred gain, incorporation relief means deferred gain. So if today I will reduce the cost by the deferred gain. If today I decrease the cost, tell me, if cost is decreased, future gain will be increased or not?
Decrease.
Increased. Because when you reduce the cost, it means future gain will be
Okay.
increased. Okay?
Yes, yes.
So base
Yeah.
cost of shares will be calculated. Whenever you will later dispose these shares in future, you will use this base cost. So the concept is, whenever you will transfer the sole trader partnership business to company, and on the assets of the business a gain arise, this gain will be deferred through incorporation relief, and this deferred gain will be chargeable. When it become chargeable? When you will sell the share of the company in
When you
future.
sell.
Okay,
Yeah.
so that
Yeah.
is the concept. Are you writing? Please make this diagram.
Yes.
That
Yeah.
is very important. Any problem?
Yeah.
Okay. Please give me a minute. I am sending you a question list. Before doing the question, you can see my notes in corporation relief heading, and you can see the business heading and the share of company. Same thing I just mentioned in the here in the screen. Okay. Now next,
Mm.
incorporation relief mean deferred the gain, and when you defer the gain, that is a relief. Defer is a relief because today we are deferring the gain.
Yes.
That's a relief for us. And whenever tax department will give you the relief, tax department impose the conditions. Whenever you will meet the condition, then you can get the deferral relief, otherwise not. So what are the conditions of incorporation relief? Conditions are very important of all these reliefs. Previous topic, gift relief, is also very important. Gift relief, from my recorded lecture, you have to revise the gift relief, rollover relief, holdover relief. Okay, very important topic.
Okay.
Takeover topic is
Mm.
very important. You have to revise, because tomorrow we will start the IHT topic,
Mm.
inheritance tax. Before going to the inheritance tax topic, you have to go through all these CGT important topics. Okay.
Okay.
Okay. Conditions. You can see the three conditions of incorporation relief. Number one, consideration is in the form of shares. You can see here, for example, when I transferred the asset to company, in return from company I can get the shares only. That is a condition. Okay, so consideration is in the form of shares. Second condition, business must be transferred as going concern. Mean, when I transfer the sole trader partnership business to company, my business must be going concern business, not seized business. Okay. And the third condition is all assets should be transferred to company. Means all assets of the business, mean land and building, plant and machinery, everything I have to transfer to company. So there are three conditions. Consideration is in the form of shares, business must be transferred as going concern, and all assets should be transferred to company. Next line, next paragraph, if consideration include cash plus shares, mean first condition is consideration is in the form of shares, but if you will receive the cash along with share, then tell me, on cash portion, can you get the incorporation relief or not?
No.
Mm.
No.
No, because the first condition is you will get the incorporation relief. The condition is consideration is in the form of shares. If you will get
Okay.
the cash along with share, then On cash portion, there is no incorporation relief.
Yeah.
So what will be the
Yes.
formula then? Incorporation relief formula, when cash is received, then you can see here incorporation relief is equal to gain multiply share consideration divided by total consideration. Total mean cash plus shares. Okay, now I am sending you a list of question. So please. Just 1 minute. Okay, the second page now you can get on WhatsApp. Have you received the second list of question? Everyone?
Yeah, you forward us. You
I
forwarded
forward you the
Yeah.
yesterday.
on WhatsApp.
Yeah.
The second page which I
Yeah.
forward here right
Yeah.
now. Please open this second page and you can see the third question of this list. Third question, Mr. A transferred a sole trader business into a company, and you can see the box.
Yeah.
PPE mean property, plant, equipment, market value 1 lakh, cost 75,000 and gain 25. Then goodwill 25, cost 0, gain 25. Other net assets of the business is 15,000 market value, cost 15, gain 0. Next line, total market value of business is 1,40,000. Whole consideration is in the form of shares and the requirement is compute gain. Okay, when you transfer the sole trader business into a company, you will get the incorporation relief. Firstly, tell me what is the, tell me direct the DP minus cost direct gain on the business, on business. Gain is already given in the question on all the assets. What is the total gain of the business assets?
Yeah.
50,000.
50,000.
So DP minus cost 50,000 gain
Yeah.
arise. This gain will be deferred
Yeah.
corporation relief if I will get the shares of company. What is
Yeah.
the market value of worth of my business? Total worth market value of my business.
140,000.
140.
Market value of business mean cost of shares. Okay. Same market value become
Yeah.
the cost of shares 140.
Okay. Yeah.
So cost of share is 140. So this business gain 50,000 will be deferred through incorporation relief. Incorporation relief will be available. All gain 50 will be deferred. Chargeable now 0. In return, I will get the shares of company and the cost of share is 140. If today I will decrease the cost of share by the incorporation relief, deferred gain, incorporation relief 50,000. If cost will be reduced by 50,000, if I will reduce the cost by 50,000, future gain will be increased or not?
Increase.
Increase. So what is the base cost of shares now? 90,000. Whenever I will
90.
sell these shares in future, I will use this base cost. Clear? So whenever you will later dispose these shares in
Yeah.
future, you will use this base cost. Okay, next question. Uh, the next question, Mr. P, last question of this list. Mr. P transferred his business to a company in July 2011. realizing a gain of 24,000 on the only business asset transferred, which was factory. The consideration comprised cash 25,000 and shares at a market value of 75,000. It means in this question you are getting cash plus share. So, your incorporation
Yeah.
formula will be changed. And your requirement is to
Yes.
calculate the chargeable
Yeah.
gain and base cost of shares. Firstly, tell me what is the uh, DP minus cost direct gain of the business value.
Gain.
What is
24,000.
24,000.
that's 24,000. This gain will be
Yeah.
deferred to incorporation relief. How much incorporation relief available depends, because in this question cash is also received along with shares. So formula of incorporation relief is gain, which is 24,000, multiply share consideration. What is the share consideration in the question?
75.
75 divided by total consideration. Total mean cash 25 plus share 75.
100.
So it is 18,000 gain will be deferred, and the chargeable gain now is 6,000. On this 6,000 you have to pay the CGT now. How to pay CGT? Firstly you will deduct the annual exemption,
Yeah.
and your all gain will be covered under the annual exemption. Taxable gain 0, CGT 0. Okay. And in return you will get the shares of company. What is the worth of market value of shares? Cost. Market value shares, market value given or not? 75.
75.
If today I will reduce the shares cost by the incorporation relief, deferred gain 18,000. If today you will reduce the cost of share by 18,000, your future gain will be increased. So base cost of shares will
Yeah.
57,000. Whenever you will sell these shares in future, then you will use this base cost. Got my point? So it means in first question which
Yeah.
we have done above, all the gain is deferred because consideration is in the form of shares. That's why incorporation relief, to incorporation relief, all the gain will be deferred. But in this question, because cash is also received, that's why incorporation relief will be 18,000. Not 20 full gain, not will be deferred. Only partial gain will be deferred. Okay. So when cash is
Okay.
received, then partial gain will be deferred. If only share consideration received, then full gain will be deferred through incorporation relief. Okay, next point, next paragraph. Partial claim of incorporation relief is not allowed. However, tax planning can be done by taking some cash consideration. What is this? This point I will just explain through the question. So please open the above list of questions. The first question, Mr. A transferred his business with market value of 1 lakh and cost of 50,000. He has brought forward losses of 7,400 and whole unused annual exemption. He want to use his annual exemption and brought forward loss. That is a tax planning. You want to utilize your brought forward loss and annual exemption both. So how much gain you have to defer to incorporation relief so that your annual exemption and both brought forward losses both will be saved. Okay, so that is a planning point. Please wait a minute. Leo.
Yes.
Okay, this point, this question, in this question, firstly tell me the market value of the business. What is the market value disposal proceeds?
100,000.
100,000 market value of the business. Less cost, 50,000. And what is the gain on the business? 50,000.
1,000.
Gain you can defer through incorporation.
Hello, there's some noise in the background, madam.
Okay, now
Hello. Yeah, it's okay.
in how much of the 50,000 gain I can defer through incorporation relief so that my brought forward loss 7,400 and annual exemption 11,700 will not be wasted. What will be the figure here? Figure of incorporation. Please calculate it.
30,900.
Yes, 30,900. You know, you cannot make the incorporation relief partial. But for tax planning purpose, tax planning means you want to utilize 7,400 brought forward loss and 11,700 annual exemption. So that's why you are making the incorporation relief 30,900 partial, right? Now tell me, when incorporation relief will be
Yeah.
partial? When you get the consideration, whole consideration in the form of share or cash plus share?
Cash.
Yes, it means in this question we are making the incorporation relief partial. So that's why our 7,400 and 11,700 annual exemption will be saved, utilized. That's why you will make the incorporation relief partial. But in return, you can receive the cash consideration along with yours. That's why you can make the incorporation relief partial. Otherwise, it is not allowed. Full gain you have to defer. But here it means when you get the cash consideration and make the incorporation relief partial, what will be the formula of incorporation relief then? Formula of incorporation relief is gain 50,000 multiply share consideration. In this question, share consideration is not given, but divided by total consideration. Total consideration is given in the question.
100,000.
100,000.
100,000. Now I don't know in this 100,000 total consideration what is the value of cash and what is the value of shares. Can you figure out the X figure? X mean
Yeah.
Yeah.
in nominator figure you can see the value of X. X means share consideration. What is the value of share consideration X figure? We can rearrange the formula and find out the value of X. X is equal to
61,800.
denominator figure will be nominator 100,000 divided by 50,000 multiply 30,900. So what is the value of X?
61,800.
61,800. It means in the 100,000 total consideration, the value of share is 61,800 and the remaining value will be cash consideration. Okay. So now tell me the base cost of shares you have to calculate. Market value mean cost of share is 61,800, which already from the when you decrease the cost of share by the deferred gain incorporation relief 30,900. So if today we will decrease the cost of shares, future gain will be increased. So what is the base cost of shares? What is the base cost?
3,900. Same.
Yes, whenever you will sell the shares in future, you will use this base cost. Done? That is a planning factor. Planning means you want to utilize your brought forward loss 7,400 and annual exemption of 11,700. So when you utilize this annual exemption, you have to make the incorporation relief partial. And when you make the incorporation relief partial, in return, you have to receive the cash consideration along with shares. Got my point?
Yeah.
Okay. Next heading in this topic is when to claim incorporation relief. Another tax planning means uh, when you have to defer the gain. You can already, if you revise the recorded lectures of CGT, the first topic, part disposal. Have you revised part disposal or part disposal topic, CGT topic?
Exposure.
Part disposal topic, you have to revise the first topic of CGT. Okay.
Yeah.
In the part disposal topic, when we sell the part of asset, not full asset. For example, you are selling the part of it, and then gain arise. The gain on part of asset can be deferred through the small part disposal relief. Have
Yeah.
what my point? So small
Yeah.
part disposal relief is a deferred relief. You can defer the gain of part of asset. But before deferring the gain, you can see the 5 planning factors before deferring the gain in your notes, part disposal note. 5 planning factor before deferring the gain. Which planning factors? Can you tell me? Before deferring the gain,
Wastage.
yes, wastage of annual exemption you can consider. Second, you have to consider the future incomes before deferring the gain.
Future
If future
income.
incomes are high, can we defer the gain or not?
No.
Future.
So, third planning factor is you can consider the future tax rates. Tell me if future tax rates are high, deferring the gain is suitable or not.
Not
Not
suitable.
suitable.
And if today rate is high, future tax rate will be low, then
Yeah.
Then
you
deferred.
can defer the gain.
Different.
The fourth planning factor before deferring the gain is you can check the future losses. If in future there are losses available, whether deferring the gain is suitable or not.
Say again.
Yes.
If in future you have capital losses, then deferring the gain is suitable or not.
Yes, it's suitable.
Yes, you have to defer the gain and utilize the future losses. Okay. When you set off the gain with the losses, your gain will be reduced, so CGT will be reduced. And the fifth planning factor is you have to check the brought forward loss. Brought forward loss means from previous year, if you have a loss today, can I utilize this loss today or I can defer the gain? If you have a brought,
Utilize a loss today.
yes, utilize
Brought forward.
forward loss and don't defer the gain. Okay. So out of
Yeah.
these 5 planning factor in the incorporation relief topic, you will use the tax rate point only. Third point of planning factor, third point, not whole points. Okay. So when examiner asks you when to claim the incorporation relief, means when it is suitable to defer the gain, then you will check only tax rate factors and then decide when to defer the gain. Okay. Just make a diagram. The scenario is when you transfer the sole trader partnership business, mean unincorporated business, into a company, right? Then when you transfer the business into a company, it means all the assets of this partnership business or sole trader business you are transferring to company. And on these assets, disposal proceed, less cost, a gain arise. Okay. Please give me 2 minutes.